Hey, it's Paulo Brantz with this weekend and interest rates for Friday, April 4th. A couple things that we're going to do differently here in an attempt to create these videos or make these videos a lot shorter. In the details or in the links or in the comments, there's a link to a booklet. You actually get a booklet that you can go through the details of all this information that we're going to talk about. Also, really excited at the very end of this video, we're going to do giveaways, whether it be free appraisals, lower closing costs. You have to hang out to figure out what it's going to be this week. And that's going to be good for 1 week until we do our next video, which is going to be a different giveaway. So I'm excited to make buying a house even more affordable for you with these updates. So let's talk about interest rates. This week has been a really strong week for interest rates. We saw a steady decline rates right now. VA's at 5.75, FHA's down to 5.625. That's crazy. Conventional at 6.375, and jumbo is at 6.875. Now refinancing rates are nearly identical. And keep in mind, if you're out there and you're thinking about doing a cash out refinance or having a hard time getting a home equity line of credit, give me a call. Would absolutely love to help you with your finances. Now let's take a look at what happened this week in the market. This week we saw fewer job openings, lower hiring confidence, and a slight uptick in unemployment, which, as we have talked about in the past, the bond market is very focused on that unemployment figure, which sooner or later is going to trigger the Feds to make a different decision or reconsider their decisions on how many times they're going to lower the Fed's short-term interest rates. Even though that the ADP job report came stronger than expected for job growth, Atlanta Fed dropped their Q1 GDP readings by 3.7%, a negative 3.7%, which is all pointing to a sign of recession. Now, I want to remind you, in recessions, housing and interest rates have done very well historically. So this could bring a lot of payment relief to people as we get closer or we start moving down the line here closer to this recession. So where do we go from here? We had a big gain. I am recommending locking this week because whenever you have such an improvement in interest rates, you don't want to get too greedy. Next week, we have two major reports coming out. These are definite market movers. It's going to be the CPI, which is a measurement of inflation, and PPI, which is the business measurement of inflation. And these are things that are going to help either move our rally forward, or they're going to put us backward and take back some of those gains. All right, let's get into it. What is the giveaway this week? This week, if you apply with us and get in a contract, we are going to pay your lending fees for you. That is huge savings. That can be up to $1,300, more money back in your pocket. We want to help you save money. If we're not working together, there's a QR code here, or just email me, whatever it takes. Let's you and I connect here. Actually, the QR code's in the corner of this video screen. Anyways, so with that, I hope you have a wonderful week. Paul